Hey everybody, what is going on? Today we're going to be talking about 4 types of market structure that you can use immediately today to begin trading Forex. So I'm going to be breaking down support and resistance, supply and demand, trend lines, and just a few patterns that you guys can begin trading today. Then I'm going to be telling you guys what I personally like to trade and why I decide and how I decide to trade it. So make sure you have your pencil, your paper out because content is about to begin. So if you guys don't know, my name is Shaquan and I am the trading educator at SLFX with the coaching program Trade on Purpose. And I love teaching people how to swing trade. Now, when it comes to swing trading just basically means you hold trades for more than 24 hours. That's it, right? The ideology of it is because you probably have a busy life. Maybe you have a family life, you have children in the background. You can't really focus so much to spend a few hours on your chart at a time. So maybe you need to let your trades run so that you can spend time with your family, with your friends, or even at work. Or if you own a business, you need to hone in on that business because you want trading to be just an additional stream of income for you for the moment before it becomes a full-time stream of income for you, right? So that being said, let's go ahead and let's get started. Let's start with support and resistance. So when it comes to support and resistance, you're basically going to the left to view past market movement. So all the candles that are forming from now and that happened days, weeks, and months later, you're observing them at a particular exchange rate or rates. And you're trying to figure out what exchange rate is priced or these candlesticks touching more often. Now, on my left hand side is my daily, on my right hand side is my 4-hour, because we're going to do something with both of these time frames. I'm going to show you guys what time frames to analyze these on and then what time frames to enter these on. So let's go ahead and look at it. So let's say in the daily time frame, you don't, when it comes to support and resistance, you don't want to go too far to the left, especially if you have multiple candlesticks in one area. I'm using AUD USD as the example. We're just working with September, October, November time frame, some December time frame, because I want you guys to practice this in the future where price is now after this video. Okay, so you kind of got some homework to do after this, okay, because that's what we're supposed to do. You're supposed to learn and then redo it so you can see how you pan out at the right. So basically, when it comes to support and resistance can be a level and or a zone. When I traded support and resistance, I like to use both in the same area because support and resistance is not just one exchange rate. You have to think about it. You have wicks and you have candlesticks in one area. So you want to gather the wicks more than the candle body. The candle body just represents where price opens and closes. But the wicks are the high and the low of the days depending on the time frames that you're on. So let's use a horizontal tool. So using this horizontal tool, all I want to do is just see within this area, within this range, where did price touch more so than often? Where are the most wicks that we can see gathered? And you can see a wick gathered here, right? For your support. And then you can see a wick touch here, resistance, and then you can see multiple wicks in that one area. And then if we keep coming here to the right, because remember support and resistance goes from left to right, so then you can see price tap here and then here becoming resistance, right? It breaks under, becomes resistance, and then it falls. Now if we could do one more, because with support and resistance you don't want too many, if we could do one more, you can see this area be support. You can see a bunch of wicks and candlesticks in this one price range. You can even see price push off of the support and then come back under to test under and then continue down. But what's most important is your price line, and that is where price is trading at for the moment. So do you guys see right here, I have a peach line that says 0.72101. So what this means is that that's where price is trading at for the current moment. Here's why this is important. Any support and resistance line that you plot over where price is moving at for the moment, that's your resistance levels. And what this means is when price begins to trend up, you want price to come up to those resistance areas and pull back. The reason why you want price to pull back is because if price is trending up, those resistance areas are your higher highs. And then when price pushes down, any level under is going to be your support levels. And then if price pushes through, or what you guys will call a break in a retest, pushes through your retest, it becomes support and then resistance. So what you're getting are higher highs and higher lows at those areas, okay? Now, anything under your price line where price is trading at is going to be your support level. And the reason why this is important is because anything under that, when price bounces off your support, is going to be your lower lows. So when price bounces off your support into your resistance line, then that becomes the lower highs, lower lows, and price starts to trend down. That is how you know what support and resistance, if you're in an uptrend or a downtrend. So for example, let's move a little bit more. Let's go to the left here. So you guys see how you don't have as much information to the left. And even though in this area you have a few wicks that touch nicely here. So what I mean is you have a touch here of support, your supports. That is pretty good in this one general area, okay? And if you wanted to put one more line, let's say over here, now we want a line below. Let's see if we can find a really good one. Now in this area you have a lot of information, but what stands out to me more is support here turns into resistance here. Even though price is going back and forth through those levels, now there's always a con with support and resistance. When price is breaking through support and resistance like this, once you drop that in time frames, you can think that these are breaks and retests, but these are called narrow trends. But we'll get into that in just a second. And then I see a level of support right here. So you guys can see that support, support, support. Now, anything under where price is trading at, that's your support. That's how you know price will be in a downtrend, but if price is over it, price is in an uptrend. So let's actually take a look at this area on the 4-hour time frame. So you guys can see how price is breaking through these levels, This is what you would have to be careful with if you were supporting a resistance trader. Could you put more levels on your 4-hour? Yes, but let's ask yourself questions here, because this is what I love to do in creating strategies. If you put levels on your 4-hour, would you enter on the 4-hour and or the 1 hour, and would you trade to the 4-hour support and resistance line, like from 4-hour to 4-hour, or 4-hour to daily, or daily to daily? What would you do? Because when it comes to creating a trading strategy, these are the questions you have to ask yourself. Like, what was the purpose of the support and resistance lines on the daily? And then when you drop down, what was the purpose of the support and resistance lines on the 4-hour? And this is where you really want, as a beginner trader or a struggling trader, answer that question first. What time frames have your priority? So if you're a new trader and you're just beginning, here are the time frames that I would say you should use first. Use the daily time frame to plot support and resistance, and then use the 4-hour time frames to enter. One of the reasons being why you want to stop here to enter trades, because you can actually see price reject these areas very well, where you really wouldn't need to drop down. So for example, when price on the 4-hour time frame, now I'm over here to my right hand side. When price came back up into your resistance area, price gave you a hammer and a bearish engulfing candle. So you could trade from the daily level as resistance and trade it back down here to your support area. Yes, price ends up breaking this and everything. Depending on how you trade this, maybe you bought here because you have some bullish information here. You have a spinning bottom, you have a hammer. Wherever you place your stop loss is up to you, because stop loss is always personal. Maybe you bought back up into your resistance and then it rejects it again. You have another beautiful bearish engulfing candle right here, and then price ends up dropping. I'm not gonna talk about it up top right here because you see this first, and then you sell, and then however you continue to trade is up to you. But you can see the candlesticks because they're bigger. You don't have to worry about the 1 hour. You don't have to worry about the 30-minute, the 15-minute. You come here once or twice from a 4 to 8 hour period, because every 4-hour candlestick closes every 4 hours. Then there you go. You have patience to hold the trade, but you also have patience to wait to enter. For example, this green candlestick closed at 9 a.m. Eastern Standard Time. Ask yourself, could I have been there to trade this 9 a.m. candle? The next candlestick closed at 1 p.m. Ask yourself, or 1 p.m. Eastern Standard Time, could I have been there to trade this 1 p.m. candlestick, right? Or many just enter on that 1 p.m. candlestick. And then could I have had the patience, and this is August 5th, could I have had the patience to wait until August 11th for it to reach my take profit at my next level below? Because hey, some trades will hit within 24 hours, 48 hours, 36 hours. Remember, the point of a swing trader is to hold a position, right? But could you be patient enough to do it? So those are two time frames that you could hold this trade for. So I'm going to make this video a series because I can see that this may take some time. We don't want this series to be long. It's probably going to be a 4 to 5 part series. So this is the first video of the market structure series, choosing what type of market structure you want to enter on, the time frames that you want to use. And I'm going to be giving you guys the time frames to use as swing traders if you are a swing trader. Remember, we only pair 2 time frames at a time because the goal is for you to be able to plot, to see, to execute, okay? I believe in 3-step systems, 3-step rules. Now, let's talk about the cons and the pros of support and resistance before you guys move on to do this yourself. One of the best pros about support and resistance is you have automatic take profits, meaning every level that you place is a take profit. So if you bought here, this is where you enter. Your next take profit is resistance. If you were to sell here, your take profit is support. If you buy here, your take profit is going to be resistance. Automatic take profits, you really don't have to second guess. Now, another pro about support and resistance is it's easy. All you need to do is see where price has touched multiple times with wicks. This is subjective, meaning all you have to do is use your own eyes, right? If there are wicks in multiple locations where price is touching in multiple areas, it can be on top, it can be on bottom, meaning you guys see how price is touching here. You have a wick breaking through wick, wick, candlestick, wick, wick, wick. Find a wick that price has in common with these other candlesticks, right? It's just one. Choose either one. It doesn't matter if it's breaking through or how many times it's breaking through. Honestly, that doesn't even matter. Let me give you guys an example. Pretend there are 5 of you guys on a pole. That doesn't sound right, but it's a horizontal pole, not a vertical pole. We ain't stripping here, okay? It's okay if you're a stripper. But anyway, so let's just say that you guys all have different lengths of legs. Some of you guys are short, some of you guys are tall, but some of y'all's legs are longer than others. Some of y'all's legs are shorter than the other. But what doesn't change, the variable that's not changed, is that horizontal pole. No matter how long or how short you guys are, it's a level at which you guys are sitting. So think about that, okay? This is the level at which price is sitting. And this is where you're saying, I want to execute the trade from. So the next pro is it's an automatic entry area. So if you say, Shaquan, I don't know where to enter trades when I'm using support and resistance, what did you just plot on that price chart? That is your highlighter. That is what you want to use. And speaking of a highlighter, this is why I like to use zones. So if there is a leftover wick here, what you can do is with any leftover wicks that you have, and there's a way I used to love to plot these zones. It was so beautiful. So what I would do, and follow me over here to my daily time frame, I will find the shortest wick closest to the level on the top and the bottom of the zone. So for example, to me on top, this wick right here is the closest wick to the level on top. And then there's a wick right here on the bottom, right there. That's the closest to the horizontal line. And then all I would do was clone it. And then I would put it anywhere on the next levels. Because mathematically, if you know anything about sequences, and math is why Fibonacci's are important, mathematically, it's going to actually line up with other price. Y'all see how that's working out? There's not much that you really have to do. Look at that. When it comes to support and resistance. If you use things psychologically, and let's talk about mindset with support and resistance, to psychologically make what you see a lot better. And if you weed out and take out the information that you know and don't know, for example, what don't you know about support and resistance? What do you know about support and resistance? Explain support and resistance in your own words. Support and resistance is just basically where buyers and sellers have gathered at one exchange rate or a series of exchange rates There's a lot of buying and selling decisions going on there, and this is why these are popular levels in the market. It's just a bunch of buyers and sellers in that one area because you can visually see it. It's the popular crowd, the cool kid crowd, and you're going to make a buying and trading decision with them based on past structure, or not structure, but past buying and selling decisions. You can see they sold here, bought here, sold here, bought here. You want to be a part of that buying and selling decision. Now let's talk about the cons for just a quick second. I think a con with support and resistance is you don't see trend, meaning you have yet to separate trend from the buyers and the sellers. All you see are levels. If I were to ask you what is the trend here, could you separate it from support and resistance? If I asked you what was the trend here, what was the cycle? Are we reversing? Are we retracing? Is this a pullback? Is this trend continuation? I think sometimes a lot of traders can't distinguish between it. And especially when they start to drop down in lower time frames to find their entry, this is where they could get lost. They'll say, well, I thought I was selling long term or buying long term with support and resistance as a swing trader. It's like, no, you have to separate the trend. I think another con with support and resistance is every time price breaks a level, I'm going to use the standard terms now, breaks a level, this is automatically when you want to drop down to find the quickest entry. And I think you make more trading mistakes this way, thinking that just because it broke a level, you're supposed to be buying. Now you're supposed to be selling. You want to enter in immediately. And without that trend portion that I just talked about, you're going to be on the wrong side of the market more often than not. One of the last cons about support and resistance is I really think you can be waiting on more setups than not, meaning like for example, you don't know if price is going to touch your resistance level. You don't know if it's going to come back and touch your support level, or when it's going to turn into support to resistance or resistance to support. You could be waiting more than a supply and demand trader or a trend line trader, but then that turns into a pro. I think when you're okay with waiting for the perfect setup, one, you don't lose money, right? You're not in a trade. Two, you can make quality sound decisions. So now this is going into the patience part and mindset. Just be patient, and remember, keep in mind that just because price breaks a level, or I don't like to say break, I like to say pushes past a level, doesn't mean you have to immediately get involved or immediately drop down in time frames. You really want to make sure that price is ready to give you a really good lucrative position before entering your trade. Okay, so this is just an example of the support and resistance portion. We have 3 more pieces of market structure to go over, but here's what I would like you guys to do. Comment down below if you're a person you're watching this, you've been struggling with support and resistance, and you found value in this video or a takeaway. What was your takeaway in this video? Or if you have a question about support and resistance, drop them down in the comment section below too, and I will answer them. Also, be sure to like the video and subscribe. I pray you guys have a safe trading week this week. I'll speak to you guys later in the next video.